Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this is for Thursday, the 13th of April, 2023. All right, thank you for attending today's webinar. I had more questions that I could get to. So if I didn't get to yours, I apologize. We were just buried in them. A lot of great ones, a lot of markets we covered. I'll probably have another one in about 2 weeks. I'm going to do another special report for you coming out. Picking the market right now, and then I can tell you what it's on because I don't know. Now, it's interesting. You know, I just read, could not have been 10 minutes ago, Bank of America, their note to their client on the warning on earnings. And it's dire. And it says how things are going to start shaping up here and so on. You wouldn't know it by looking at the stock market, which is a tear to the upside. And what I told you was the naysayers have stepped in, and they are absolutely adamant that the Fed will have to pivot this year, that maybe they'll get away with one hike in May, but after that there won't be more hikes and that there'll be pivots to the downside. And they are on a buying spree on that thinking. Okay. But what happens if the inflation reading, which has been falling and gone into producer prices and falling, starts going into corporate earnings and they start to fall? Are we too rich in pricing right here? Okay. If you go into a recession, if you study recessions, you don't typically go into them with this type of feel. So the market doesn't think the recession is coming. I know that sounds crazy, but it's the way the market is. I don't fight the tape. Never have. Not going to start now. Market wants to go. That's fine. What I think doesn't matter. What the chart says or how I read it is all that I really care about. And it's that simple. I leave the writing of those newsletters that are going to make those predictions to others, the economists, as we call it. I'm a chartist. So let's take a look, if we could, and go to the first chart. In CarMax, one of the things we've been talking about, were you going to come down and fill this gap or not? You still haven't done it. The market hasn't given up in trying, but you haven't given up on that. In terms of the pattern, you have higher lows, higher highs. The market is fighting a battle, as you can see, in the zone of the 200-day average of closes. Support should be on the break into the gap at the 100-day. The fact that you're over it should offer support as you pull back to it. And the Bollinger Band, see the black line here? What is the market saying? It's saying that even with the big spike off the earnings that came out, no. Market doesn't belong over that number. And it's pulled back into it now for 2 days in a row with that, the resistance. What if it doesn't fill the gaps? Well, that's a sign of pretty good strength as far as I see. Normally, you do fill those gaps. Where are you in momentum? You're not even trying to embed. The market has slipped on it again to the downside. So I see a market as overbought, a gap in the chart, trying to fill a gap back to the 100-day average with resistance just above it at 71.24. In Schlumberger, you still have the higher lows, higher highs. You still have an overbought market. The 100-day average in green, you do see that. That is still acting as the resistance. It was before. It still is. If you go through it by a bit, maybe you get up to the upper Bollinger Band. We'll see what that all does for the market. When you go to UGA, the gasoline trust, today was the correction, one of the corrections that we're starting to get in gasoline prices. Now, if you looked at the producer prices, you know, the commentary around it today was, oh, they're slipping because gasoline was down, which it was in the month of March. But at the very end, as OPEC came in and made those moves, gasoline soared to the upside. So what are they going to say with that? It's only mid-month. We have to see if the market can hold up. But if that's the case, while you were here in the month of March for the PPI and you had your pricing there, how do you answer the pricing that's up here so far? See what I'm getting at? I, for one, happen to think that with the summer driving season and the like, that will be good. There is a caveat in gasoline pricing, and that's that the seasonals stop with the typical surge on April 15th. There's another set that comes after the month of April, but for this month in front of it, that could be why we're seeing some profit taking in front of the weekend. Remember, seasonals are historical things. If history worked all the time, you'd be the richest person in the world, right? Doesn't work that way. You're not Mr. Arnault, who is the richest person in the world, and he's solidifying that. Did you see that LVMH stock? It's hard to believe that while in America we're pulling back on spending, and we are pulling back, the one thing that you're not seeing in Asian countries is they're going ahead and they're buying, and China's buying like there's no tomorrow, which is LVMH, one of the bread and butter. So they're everywhere, and that's pretty good news. Lower highs, lower lows, Tesla fighting a battle. I saw today a picture come out where maybe it's a new Tesla 3 style. I don't know. So, you know, I happen to think the car is in dire need of a new move in a look. It's time. It's 12 years old. I'm tired of looking at it, but that's just me. I like aesthetic cars. Show me a Ferrari. Show me a Maserati. Aston Martin's absolutely gorgeous. The new Cadillac's a beautiful car. They're electric ones. I happen to like the Lucid. There's a bunch of them that I think are very, very pretty out there. All right. I'm not in love with the look of that, but it's the best-selling electric car there is. Sort of like a Volkswagen. If you didn't like the looks of it, how wrong were you from the, early 50s up until people want them back right now? In any case, you'd have to get back over 191.58 to say, market just wants to stay spinning here. I'm looking for support on breaks, as you know, to the 178.16 level. Doesn't have to get there. You're already oversold. More or less just one of these wave-type tradings. Trend is down for the moment, but as I said, take out 191.58 and you get your pop to the upside. In XLF, the financial service, I'll be all over this tomorrow. Banks are reporting. I think we have PNC, I'm going from memory, Citigroup, JP Morgan, Wells Fargo. Those four report tomorrow. BlackRock reports tomorrow too. So it's the first day of a lot of, be an investment firm, but the banks. And I want to see just how they do and what they're forecasting and saying going forward. I think that's very important. What do their deposits do? Where's the profit coming from? Did they see runs? How much money did they take in off these scary issues? How much money are they losing into money market funds? I'd like to see all that's going on. Higher lows, higher highs, still friendly, up into the resistance, not embedded. So you're in an overbought area. Then we get to the industrial sector, which is still bullish. Now, it has fought and been fighting at this green line, the 100-day average. If it can clear it, and it likes the news tomorrow, then the Bollinger Band, 101.45 should be the next resistance. Support here at 98.70. In SOX, which are the semiconductors, the market is trying to get back on through here. In fact, I'm looking at it. It did it today, so I've got this wrong. You now have the pattern of lower highs, lower lows. You did turn the trend down with the objective. I just missed. I didn't see that. Here's why. You can see 417.89, and the prior low was 417.97. So the market is back into a downtrend. In the home builders, well, interest rates are going to be so important to them. And we'll see what they do. You know, you got Lennar, you got all these great builders, and I think they're doing pretty well. They know how to work in this market, so it should get interesting. While I speak about that, I can't help but say, I started off today with the report. I'm reading in Manhattan, rents at an all-time high. We keep hearing our Fed saying, they see that rents are falling. Manhattan is not the mainstay of middle America and other spots. But it gives you an idea as to what's going on. And what is going on is pretty simple. You hear people are leaving the cities and so on, and the office vacancies are 20%, 30%. Why are rents at an all-time high then in Manhattan? I mean, something's got to give here, and there's fewer and fewer incentives that the landlords are finding they have to give. So it is still on fire. People can't afford typically very expensive places in New York, but rents are crazy. A one bedroom's $4,300 on average. That's a big number. XLE, higher lows, higher highs, either side of the 100-day average. So which way does the energy go here? This is a very, very important time for it. I, of course, look and I say, hey, whatever the Saudis and Russians want to do right now, they're in control. And if the market can pick its leg up from here, then why not get back up to 89.43? I think you're at a zone where you have an embedded reading. I hate, personally, telling my clients to buy the first challenge of a 100-day average as you rally to it or if you break down to it. I don't like to be on that side. In gold, everybody's favorite. So people are looking at two things. Number one, they think inflation will be sticky. Number two, they think the Fed's going to back off on the rates, which will break the dollar, which is gold's domain. Doesn't have the headwind from the interest rates going higher. It has the benefit of a falling dollar. It's a storage of value. And this is the scenario that it wants to run on. Giving you the whole story of gold. In SLV, as goes gold, so will go silver, and silver will say, yeah, well, you know what's even better here? China, if you looked at their exports, big time, all right? Their economy came roaring back in the past 30 days. So the market's looking at that. Are they going to be demanding more of this in the copper market? And as you can see, COPX, and I've said it here, I even said it in the webinar today, so much stronger than the copper futures. This market's the one that's been on the tear. It's got the embedded reading. It's all systems go on that. In TLT, you're falling back. So why is this getting bearish? If this comes down, that means interest rates might go back up. So what's going on suddenly here? I don't understand it from a fundamental point of view. As a chartist, you finished off today at 106.05. Trend down, bias down, outside day down, and momentum down. Until today's highest taken out, a potential target is the 100-day average at 104.66. In UUP, the dollar, you know I recorded a bearish report 2 weeks ago in the dollar, predicting that maybe you'd get it one rally, but I think it's going to start failing. I'm there. I'm just looking for spots to tell my clients to pull the trigger. FXC's the mirror image the other way. Nothing I see there. So what do you do with it all? Well, I want you to join me in the mornings. That's what I want you to do. You know, first thing in the morning, what I'm doing is, and I'm talking 5:15, 5:20 in the morning, I start recording all the different charts, and you have this in your hand. My goal is for you to have it by around 6 a.m. Central Time. And that's well before the stock market opens, everything else. I'm going to give you a recap what's going on in Asia, Europe, what the futures look like, and what the ETF lineup is looking like. How is things going? Where are the reports? What's coming in for the day? What you have to be looking for. And then we start breaking down the charts into trades. So it's not just a newsletter. Hey, I think you should buy 100 shares of BA and you should sell Boeing and you should do that. No, nothing like that at all. You see it unfold on the charts and away you go. And in addition, you know, one of the things I pride on myself, as long as it doesn't become bothersome to me, you know, I have some clients that think I'm the personal broker. I'm not. As long as you're within means and you ask me, hey, Ira, can you tell me what you think of such and such and such and such? I'll do a short 30-second video for you of the charts and I get it right out to you. Okay? People that bother me, I'm not their broker. I'm sitting here with a newsletter and it takes a lot of time in what I'm doing, and I run a brokerage firm. So, you know, it's two-sided. The futures and doing this, not easy. And I love it because to me, a chart's a chart. I don't care if it's an ETF, a stock, a futures market. A chart is a chart. The study on the chart's the same. I teach. Take the name off the chart. Don't go in with a preconceived idea. What is the chart telling you to do? If you can follow those, you get some ideas. You can go to our website. Under research, everything you need is right there. You can move your cursor up here at any point, give it a click, it'll take you right to the research area, and join me right there. Could it be any easier? Take a look at what we put up. I'm Ira. You have a good day.